Hi everyone, welcome to this week's market update. I'm here with Eric Anderson. Eric, let's start with the big picture. What's driving the latest wave of volatility?
It's been a brutal week for markets, and it all comes down to one thing: policy uncertainty. We've got escalating trade tensions, shifting fiscal policies, and central banks still trying to figure out inflation. The S&P 500 officially entered correction territory, down over 10% from its peak. That's the first time we've seen this kind of drop since 2023. The Dow lost 537 points, the Nasdaq fell 345 points, and the culprit? Tariffs. President Trump just slapped a 200% tariff on European wines and spirits in retaliation for the EU's tariffs on American whiskey. This isn't just headline noise. Markets are now pricing in the real economic impact. It's hitting investor confidence, and it's driving capital out of risk assets. But here's the kicker. This is happening at a time when U.S. inflation data actually looked decent. Core inflation came in at 3.1%, versus expectations of 3.2%, and headline inflation fell to 2.8%. Normally, that would be a relief, but when trade policies are this unpredictable, even good economic news isn't enough to calm markets.
Next question, it's not all bad news, though. How are different regions reacting to this chaos?
That's right. Not every market is struggling. In Asia, investors are looking ahead to possible Chinese stimulus measures, and that's giving a boost to markets. The Hang Seng Index jumped on hopes that Beijing will roll out new policies to support the consumer and drive growth. That's a positive shift after a tough few months for Chinese equities. In Europe, it's been a rough ride, but there's a bit of a bounce back happening. European futures are up after Thursday's sell-off, with the markets in Germany and France is trying to recover from the tariff shock. The big concern? The auto sector. If US-EU trade tensions escalate further, European automakers will take a direct hit. Meanwhile, in the commodities space, gold is shining, surging to nearly $2,250 per ounce. That tells you everything you need to know about investor sentiment right now. People are looking for safety, and gold is delivering.
Speaking of safety, what's happening in the bond market?
We're seeing a real tug-of-war in bond markets. On one hand, you have concerns about slowing economic growth, which should push bond yields lower. On the other hand, there's the very real risk that tariffs will push inflation back up, forcing central banks to stay hawkish. Right now, U.S. Treasury yields are holding steady, but this is a crucial space to watch. If the trade war escalates and the U.S. dollar starts weakening, we could see higher inflation expectations creep back into bond markets. That could change the rate cut outlook for the Fed. So far, the market is still pricing in cuts later this year, but if inflation flares up again, that could be off the table.
And finally, what's the biggest theme investors should be watching right now?
The biggest theme is the battle between policy-driven volatility and economic fundamentals. Right now, policy risk is dominating the narrative, whether it's tariffs, government shutdown fears, or central bank uncertainty. But underneath that, we're seeing important shifts in market leadership. The U.S. is no longer the only game in town. Europe is stepping up, China is trying to regain momentum, and defensive assets like gold and bonds are gaining favor. Investors need to watch where capital is flowing, because if this trade war continues, we could see a longer-term rotation into non-U.S. markets.
That's it for this week. Stay tuned for more insights next time.